Live from the Real Asset Queen studios in Kalispell, Montana, this is the Real Asset Queen Live, the one and only show about connecting people, process, and money. Each week, you'll hear mind-blowing interviews from top industry thought leaders, as well as actionable tips and strategies that you can implement in your finances, business, or investing life. Please welcome your host, a former healthcare executive turned entrepreneur, investor, and efficiency expert, Michelle Kimbrough.
Hey everyone, welcome to the Real Asset Queen. We are on episode 26, and tonight we have Amber Tilander, who is the president of Dogwood Mountains Business Services, and we're going to be talking about how to keep your CPA happy. We're coming up on the end of the year, and Amber has a couple horror stories, but also some great actionable tips for your personal finances and also your business finances. So Amber has been with us before, and she's kind of our resident expert around efficiency and bookkeeping. And she has over 10 years of financial accounting experience, and she is a Lean Six Sigma green belt. And Amber, I'll let you fill in the gaps, what I left out, and tell us a new fun fact.
Oh, well, thanks for having me back again. You pretty much got everything. There's nothing else I need to fill in. So a fun fact, I have swam with pigs and stingrays in the ocean.
Oh, can you expand on that a little bit? I didn't realize that those lived in the ocean.
So it was on my honeymoon. We were in the Bahamas, and there's an island called Pig Island. And when you pull up in the boat, all these stingrays, very big stingrays of all sizes, kind of come up to the boat because they know they're going to get fed. So when you get out in the water, you're with the stingrays. And the pigs, I thought it was going to be fun because I thought they were cute little Wilbur pigs per the pictures, and they were not. They were the size of small horses. So just a forewarning, anybody who wants to go and do this excursion in the Bahamas, they are not small Wilbur pigs. They are small miniature horses.
So do the pigs actually swim in the water?
Yeah, they come out and greet you at the boat off the island and swim around in the water. The water is only about maybe 2 or 3 feet, but they can still walk through the water and swim through it.
Any unfortunate accidents with the stingrays?
I had a pig coming at me, and I got a little nervous because he was big, and I stepped on a stingray and fell in the water. I didn't get stung, luckily, but it just swam away.
Any black sea urchins, Amber? I know those are your favorite too.
No, thankfully, there were no black sea urchins anywhere that I could see.
That is awesome. Well, what a great experience. One day I hope to swim with pigs and stingrays myself. That sounds really cool and something right up my alley. Yeah. So thank you for sharing that. So Amber, we're coming up on an important time of the year, end of the year, where we should be, clearing out our books and tidying them up for the beginning of the new year. And correct me if I'm wrong, but corporate business taxes are due when?
They are due March 15th.
Not April, like most people think. Nope. So, and that is a common misconception around business owners. I think after 1 or 2 cycles, you finally understand it. And if you have a good CPA or bookkeeper working with you, they're so kind to remind you on that. So when we're talking about bookkeeping and making sure everything is clean, why is it important that we stay on top of our financial records and have an accurate view of them as we're going throughout the year, month to month, or quarterly? Why is that important?
It's important because a lot of people or a lot of companies like to use third-party applications that integrate with, I'm going to use QuickBooks because QuickBooks is pretty notorious, and that's kind of where my expertise is. they integrate these into their software. And sometimes what happens is Shopify is really big on it, and PayPal is another headache application to connect to the QuickBooks, because what happens is it pushes like income or invoices or whatever through, but then the funds hit your bank. So you're duplicating your income, you're overstating them. If you're not managing that correctly. Same thing if you're connecting like your PayPal account to your QuickBooks. When you're using a bank card or a credit card, and then you use PayPal to check out, it shows up twice because it comes up on the PayPal side and then it comes out of the bank or the card. So, and same thing if you're getting funds, if you're selling products. So that's a common mistake that I see happen a lot of times, because they just think, oh, it's just efficient, when it really isn't. It's really clunky, and I absolutely hate connecting these third parties because of that reason. So having that, it helps you either determine if you have duplicate transactions, whether it's income or expenses, missed items. Sometimes QuickBooks is really notorious for dropping bank connections, and there could be a couple of days, maybe weeks, maybe an entire month that you don't even realize transactions didn't even get downloaded into your software. So it's really important, because you're able to stay on top of these things and find them out more quickly than you would if you waited an entire year to, do your account reconciliations or whatever it is. Oh, I'm missing the entire month of March. So if you would have just done your bank reconciliations every month at the close of the month, you would have noticed, oh, hey, it didn't download these, or something funky happens, because it's technology and things always happen. So it kind of helps you stay on top of that. And then also, if you're working with a really good CPA and somebody that is helping you around wealth management and tax strategies, if you have accurate financial statements that you can give them, and you can kind of, do better tax planning throughout the year instead of at the end of the year, and you're trying to figure something out and trying to minimize your tax liability, that you're potentially facing like a big tax bill, in the upcoming year. So it's really important, because it just gives you an accurate picture on that. And also you can kind of see how your business is, operating. Are you operating at a loss, or are you operating at a profit? So it just kind of helps you, strategize throughout the year with your business.
Yeah, that's so critical. And I remember many, many years ago, I'm not going to put a year on it, but I was one of those business owners that did not do monthly bookkeeping. And at the end of the year, I was rushing to get everything in, because I knew tax season was coming up. And the hours spent combing through bank statements, credit card statements, you name it, trying to get everything in there so that I could provide my CPA with accurate, record keeping, so that they could do the taxes.
Right.
But I can also imagine, if you were a business owner and you needed to get a line of credit, or say, like for me, I do real estate syndications. If I needed to get a loan and I was not on top of my books, what does that look like?
There's risks in that, especially if you don't realize that you have income that's being overinstated, meaning like there's duplicate transactions being downloaded. You're telling the bank essentially you're making more money than what you really are. Or your expenses, maybe you don't have enough expenses. So there's a lot of risks that go at that, and they look at those things too. So you want to make sure that you have good, accurate financials. And what you were saying, going back and trying to add things at the end of the year, if you're doing that and you're not doing it on a monthly basis, sometimes I don't even remember what I bought last week. So how are you going to remember something back in February? What was that for? Like, was that an educational expense, or did I pay somebody? What was that? So now you're trying to remember what it is. If you're not keeping up on those, monthly. Also, I work with a lot of CPAs, and their biggest thing that they absolutely hate doing is tracking information down, trying to figure out where are your financials, where's this, where's that. So if you're working with a bookkeeper throughout the year, then your CPA has a peace of mind. Okay, I'm going to have my financials, by this time. If I'm working with this bookkeeper, I know they get financials over, by the end of January. or whenever I know that they're going to be ready when I need them. I'm not having to track, my client down and asking for, financial statements or, all of this. And another thing is most CPAs that I know don't like doing, the manual work of going in and categorizing everything. They just want to work off the financial statements.
Yeah, that's key, right? So that kind of goes back to a person's education and their highest and best use, right? So if you are a CPA, is it a good use of your time to be doing the in the weeds, small task? I know it's a big task, but the little things of tracking things down, or is it better for you to be helping your client with tax planning, right? And I would think that the latter makes more sense.
Yeah.
And also, the CPAs I know are not $25 an hour. So if you're actually engaging them to go and track down these records and expenses and put everything in, that bill can rack up quite quickly.
It absolutely can. And, the CPAs that I work with are not the ones that warmly welcome a shoebox full of receipts for them to input.
Yeah, and I think that's their biggest angst, right? Their client walks in with, a box full of stuff, and now they have to try and, comb through it and figure out what happened and piece it back together. I mean, if you like forensic work, I guess that makes sense, but that's a good portion of what you do is forensic work. I know that you've had some clients that you have actually had to, back down through transactions and figure things out so that the books are clean.
Yeah.
Yeah, for sure. So I want to talk about common pitfalls that you see business owners doing. And one of the things that is one of my pet peeves is commingling of funds.
Right.
And can you tell us what the definition of commingling of funds is and maybe some examples? Because I don't think people really understand what that means.
So I think a lot of people have a perception of I own a business and the money going into the account's mine. I can use it. If you're a sole prop, yeah, those are easy transactions. If you accidentally use your business card for a personal item, we can easily classify that, to an owner's draw. But when you start moving into other business structures like LLCs or corporations, you can't. IRS doesn't like it. CPAs don't like it. Bookkeepers don't like it. Nobody likes it. It creates a huge mess. And there's ways that you can manage that. If you use a business card for a personal transaction, basically the business loaned or it's an employee, an employee loan type of thing. But, you have to pay the business back for that. It can't sit on your books. So best practices is if you own a business, have a separate bank account or credit card that you're using for personal and, business. Commingling funds just creates a big, hairy mess that nobody likes to sort out. I had a client this year. It was a new client, and they had their wife's personal credit card connected to their business account, and they were categorizing all of her expenses to the expense accounts. And I had to go in and delete out 2 years worth of expenses, and especially current year. And I'm like, you need to go back to your tax person because these were not supposed to be on here and your financials were not accurate. And they didn't know that. They just thought, oh, well, I can connect, I'm just trying to get as much business write-offs. I'm like, if it is a legitimate business write-off, you can use it. You cannot use your wife's credit card or spouse's credit card, link it to your, account and use those transactions as business write-offs. Because if you were ever to get audited, the IRS is going to forego those things. And then you're going to have to file an amended tax return. And then you're going to have to pay penalties and fees. And I had to explain all of that to them as well. And so they didn't realize that. So it's really important that you just, if you're going to have a business, just have the mindset that I need to have just separate accounts for everything. Don't even commingle it. Any clients that I have that are sole props, I even just tell them, just have a business account, just keep it separate.
Yeah, that makes a lot of sense because you may, innocently use your personal credit card to do a business transaction, and maybe you do a couple of them on there, and then you try to take that as an expense, but it's not really an expense, is it?
No, no. So, I mean, you have to, it's not an expense. So, it's vice versa. If you, it kind of goes hand in hand. If you use a personal card for a business expense, it would kind of be categorized as, like an owner's loan to the company because you were, buying something for the company. Company's going to have to reimburse you back for that. Same thing as just flip. If you use your business card for personal, you have to pay the business back for that expense because it cannot be, you can't write it off. If I decided, I wanted to go take a week vacation and go down to the beach and take my husband and our dogs with us, and I charged it in hard thinking, oh, I did a little bit of work. No, I can't claim that as a business expense. So, if I accidentally used it or I used it, I have to reimburse it back. So
Yeah, that's key. And I think, going back to what you said, just having separate credit cards, separate bank accounts, just keep everything separate because I do believe we have 87,000 new IRS agents whose sole job is to do audits. And I personally don't want anything to do with that. So I think that's just good business advice to keep everything clean and separate as possible.
yeah, and they're coming out with new things that they're going to be looking at with these, audits and things like that with the IRS agents. So just keeping everything separate, have good record keeping, making sure that you have receipts for everything, because if you were ever to get audited by the IRS, they are going to come back and tell you that the burden of proof is on you. If you can't prove it was a legitimate business expense or it had something to do with your business, it goes. So, and then that opens a whole other can of worms. So it's not something it's not a sandbox you want to be playing in because it's more like a quicksand sandbox that you can't ever get out of.
That's a great way to describe that organization. Quicksand. It's kind of like the itch that never goes away because once they get in there, they find one thing and then they find another. And my background is healthcare, and we would do tracers, from the emergency room all the way through a patient's stay, and the regulatory agencies are specifically looking for things that don't match. And it could be as simple as one decimal point in the wrong place, or maybe somebody didn't document something, maybe not on medication, but something else. And it just, they find one thing, then they open up, to another case. And next thing you know, you have a full blown CMS audit going on, which nobody likes. So what is the most craziest thing that you have seen somebody has tried to use as a business deduction and that maybe wasn't really a business deduction?
I had that client trying to use their wife's credit card, those expenses as a business expense. I had a client that purchased a Harley that they were trying to write it off as a business expense. I've had a lot of things. I mean, and anything around vehicles is one of the, like, aside from meals and entertainment, is one of the top things, transactions, or things on tax returns that the IRS looks at. So I mean, those are things that you can't go out, and I know everybody's saying, oh, go out and buy those G-Wagons because you can write off the gross vehicle weight. It's over 6,000 pounds. You can get 100% depreciation, all that other stuff. That's great, but if it's not used for business, you can't write it off. So, I mean, if you work from home and you're trying to claim your vehicle on your taxes, the IRS is going to be like, you work from home. Where are you driving to?
Yeah, the justification just isn't there. Yeah. Wow, a Harley. That is interesting. I know people that have bought planes and jets, but they bought it through the business and they actually do use that as a mode of transportation to get back and forth from coast or look at properties or things like that. But a Harley, I'm not quite sure if you could justify that. I don't know.
I mean, they do auto like washing and put clear coats, and they were thinking about taking it to shows and, showcasing the products they use. But that's just a really fine line to be walking.
Yeah, especially since we know that category is a red flag already. So probably not best to go down that path,
Yeah.
right? So talk to us a little bit about, we only have 3 weeks left of the year. So what are some top priorities and top things that people should be doing now to prepare their financials for the end of the year closing? And then, if they are a corporation or LLC or a partnership, their taxes are due March 15th. So they need to get information to their CPA. So what should they be doing right now?
Well, right now, and you should have been starting this maybe a couple of months ago, but if there's any contractors or vendors or anything that you 1099 them, need to make sure that you have copies of their W-9s on file. You make sure that all of the contractor payments are being classified correctly, because those are due by July 31st, as well as the W-2s if you're running payroll for your company. So making sure that those things are accurate, making sure that there's no payroll adjustments that need to be done, because you do have your W-3 gets filed automatically, and the IRS form 940 also gets filed once a year, and that's in January. So you want to make sure that your payrolls are all accurate. Contractor, payments are all accurate. You have your W-9s. Also making sure that your financial statements are accurate. Everything is up to date. Everything, all your accounts are reconciled, everything. And you can produce these accurate financial statements, or some sort a set of financial statements to review with your CPA if you have questions. So, hey, or I have a transaction, I'm not 100% sure where this needs to go, if you don't have a bookkeeper. And just making sure that you're just kind of tying up any loose ends that can just make the tax season, because tax season is, everybody hates doing it. We all have to do it. But trying to make it as seamless and painless as you can is just making sure that you have everything just in order and ready to go. And you can just hand it off to your CPA or tax person and just know that everything was, done and everything was accurate to the best of your knowledge.
Yeah, that's great advice. And, going back to just getting into, a standard of work of closing your books every month and making sure all the expenses are in, if you don't have a software or a bookkeeper, is critical. Not only in case you need to get a business line of credit or tax filings, but if you happen to get an audit, it would be a lot better to have all of that together. My understanding is if you present your case to the IRS and it is pretty clean and all orderly and everything that they want, they tend to think, from what I've been told, that you have a clean business. But if you were to go to your audit with the shoebox of receipts and papers and this and that, I think that it would be more of a headache for you, and I think that they would dig a little bit deeper than what the initial issue was. So I think it's just good standard of work and practice. Maybe people can make that a goal for January for the coming year, that they do that if they're not going to have a bookkeeper do these activities. That they make sure everything is in there. And really interesting that you said that about the third party payers. I didn't realize that you could actually have duplicate entries for income, which could severely overinflate your financial statements.
Yeah, because usually what happens is, if depending on how you set it up, Shopify I'll use for as an example. When you set up the integration in Shopify and you tell it what account you want it to send the payout funds to into QuickBooks, that's how it gets set up. So if you set it up that I want these funds to go to my bank account, whatever the bank account name is, Chase, we'll just use Chase as an example, it automatically posts that into QuickBooks. So you don't really you don't see that transaction on the back end. But what you do see is when the payout funds actually hit your bank account, and that gets downloaded from Chase into QuickBooks. So then you're like, oh, okay, these were, services or sales or whatever. So then you have 2 deposits of 500 in there, one that went, directly from Shopify into your QuickBooks, and then the downloaded transaction in your bank account. So I don't like having those. I mean, people maybe have workarounds on those. It's just, it causes a lot of rework, and I just don't find that it's efficient. I just think it's more clunky than anything.
Yeah, no, but really good, to bring that up, because people may be using some of those third-party vendors and not realize that there's actual double entry in their actual accounting software.
Yeah, and that's why it's important to have a bookkeeper to keep an eye out for those things, because your bank balance and your balance, whatever is in the software that you're using, those should match, and there should be a small discrepancy, but those are probably pending transactions that you have in your bank account that haven't been downloaded yet. But you should always be able to identify what that discrepancy is. So if you have, a negative $90,000 in your QuickBooks, and your QuickBooks bank balance from the downloaded transactions only showing $1,200, well, there's something going on in the QuickBooks, and there's probably a lot of duplicate entries going on in there, or things that got missed. So that's why it's really important that you're keeping an eye on your accounts, or having a bookkeeper keeping an eye on those to make sure that, you're operating accurately throughout the year.
Yeah, that's great, because I think as business owners, we should be focused on growing our business, client, customer satisfaction, innovation, improvements of any kind. That's what we should be focused on, not entering in, expenses, or trying to find duplicates, or if we do have a big variance of a balance like that between the accounting software and our actual bank account, even though I have a finance degree, it's nothing that delights me to do. So I'd rather be doing other stuff that is, more conducive to my business. So
right,
that's great. Any last parting tips that you'd like to share?
Yeah, payroll is another big thing that can really get messed up, especially if you're starting a new, payroll system, if you're going into QuickBooks or something like that, and you have to put in historical data. Also, if you change business structures in the middle of the year, you get 2 different EIN numbers. So you have to make sure that you're reporting W-2 for both of those entities, not on just the one, because that will cause a whole payroll audit situation thing that you don't want to deal with. So just making sure that all of that is accurate and up to date, because payroll it's another nightmare that I deal with, that people don't realize. Oh, I didn't know I had to do 2 W-2s at the end of the year because I closed out that business. Well, you paid wages underneath that entity number. And you reported it to the IRS and state. You still have to file a W-2 and a W-3 for that entity, as well as the other entity number that you have, underneath the new one. So those get really clunky. So just be very mindful around the payroll, and just, if it's something that you do, and, have conversations with your bookkeeper or your CPA. Hey, I'm going to change my business structure, so everybody's on the same page, and then everybody can make sure that the transition goes smoothly, and there's not any of these little clunky things going on.
Yeah, I have a horror story with one of my businesses. I went from a sole prop, and I decided that I was going to do a corp with a S designation, but I did it mid-quarter. And I actually ran into that issue. Actually, it wasn't an issue. All of the payroll reports and everything were right in the W-3s, but it created a lot of confusion with the IRS and Social Security. They didn't know what the heck was going on. Even though there were 2 separate EIN numbers and 2 separate business names, everything, it creates so much confusion. And literally 5 years of going back and submitting the same documentation because somebody else would get new on the case. They'd ask for the same stuff again, and it was just a nightmare. And so when I talked about, the itch that doesn't go away with the IRS, it's true.
Yeah.
And the other thing that I made the mistake because I did not have a bookkeeper like you, is when I incorporated, I was using QuickBooks, but I didn't close that out and start a new one. So I kind of merged the two, and that created a huge mess.
Yeah. And that's, I'm glad you pointed that out, because that's another thing. If you get a whole new EIN number, you have to get a whole new, company file with whatever software system that you're using, because what's going to happen is your balance sheet is never going to be accurate, because it's just going to have those rollover balances from the previous, business structure that you had. So then your CPA is going to have to sit there and figure out what was current year and, deduct, and it just causes a whole mess. So it's always good to have somebody to, come along the side of you and help you with those transitions to make sure they're smooth and make sure that all the, wrinkles are ironed out and everything is good to go, so that you don't have a situation or, you hired somebody and your books aren't accurate because you're still pulling transactions in from the previous structure, or whatever. So that's another crucial thing. And another quick tip too is any letters that you get from the IRS regarding anything, payroll, income taxes, your corporate taxes, do not ignore those. Give them to your CPA or your bookkeeper immediately so they can review them and figure out what it is that they're asking. Because they do, if these things get ignored, you get nice love letters that they're going to put liens or levies on your property because of a form maybe you didn't file or you thought got filed or whatever happened. And then there's penalties and interest, and those are compounding daily. So a small little $20 bill could end up costing you a couple of $100 because you simply ignored that letter. So super important, when you get those, give them to your bookkeeper, your tax person, CPA, whoever is helping you with that, and have them review it.
Yeah, that's key, because they do like to generate a lot of letters. And sometimes they'll send you 2 or 3 of the same letter. So I think you just tend to dismiss them, but that's great advice there too. So Amber, I'm going to open it up for questions. And if there's any questions, people can type them into the chat box. But while we're waiting to see if there's any questions, where can people find you?
So I know you have my website down in the ticker. You can find me on Instagram underneath Dogwood Mountain Business, LinkedIn, Dogwood Mountain Business Services, or you can, just find me under Amber Tilander, or you can email me at amber@dogwoodbusiness.com.
Okay, that's great. That's great. Thanks so much. And thank you for your imparting wisdom as we start to close out the year. The things that we don't like to do and the things that we tend to put off till the last minute for those procrastinators. But so crucial. And I know your CPA will love you when March rolls around, because they're going to be super busy as soon as we kick off the first of the year trying to get everything together to meet that first deadline. So help them out, keep them happy, keep your books in order. All right, Amber, thank you so much for being on again. We will talk to you soon. We will see everybody next week, and hope you have a great rest of your weekend, everybody. Bye-bye.
Bye. Thanks.